And we should be live. Welcome to the Crypto Factor. Welcome to the #1 channel in the whole universe, in the whole metaverse. This is the Crypto Factor, and today we are talking with Kevin Merkel, answering your questions about crypto, your questions about exchanges, your questions about your social problems and psychological problems, anything you can think about. We're going to be answering. This is a crypto AMA. We're going to be talking about so much stuff here. We're going to be talking about Bitcoin, Ethereum. We're going to be talking about XCM staking. And yeah, well, first of all, Kevin, welcome back to the channel. Really appreciate you, man.
Thank you, Paul. Great introduction. I hope I don't get too many questions about people's psychological problems. I'll do my best, though. I'll try to knock it out of the park.
Yeah, you get enough from me and everybody else, right, at work. So the first thing I want to address is for people watching us right now saying hello, and they're already coming in. I see Escanor, I see Juxin, and I see more people ready to come in. I see 5 viewers. We're going to go up, though. We're going to get to 100, 200 viewers pretty soon. And what you may have noticed around this screen, Kevin can't see this, but you can see this. You have inside information. You can see the Crypto Factor 2 logo, and you can see, and the reason is because Kevin is also going to be in the Crypto Factor 2 book, which is coming out later this year. Kevin Merkel is the CEO and founder of Coin Metro, which is the exchange I'm actually working at. I've been talking about to you guys all the time. I've been talking about this exchange for you to join. Hopefully you have, and hopefully you will if you haven't. And he is a certified genius. He can answer any question you can possibly imagine, especially when it comes to finance. Okay, I'm not so sure about the certified, but he certainly is a genius. So let those questions coming in. We will be visiting them soon, but let's start with this. Kevin, lots of things are happening in the crypto market. Lots of billionaires are getting in the crypto market. We got this Mexican, third richest Mexican guy, Mexican billionaire, I think the 16th in the world coming in. We have George Soros, which may not be that good, coming into the crypto market. We got so many billionaires coming into the crypto market after Elon Musk. What's your take on this?
Well, I think people sometimes have this idea that it's the rich guys that always get in first.
Yeah.
But that's usually never the case. So rich people tend to, the richer you get, the less risks you take. And you also want to make sure that you can derive ongoing income from your investments. You know, to get rich, you need to get lucky a few times. You need to make investments that just, go way out of their proportions and give you 1,000x. But once you get there, the idea is to get revenue from those investments, ongoing passive income. And so these guys are already rich. They didn't need to buy Bitcoin at $1. They didn't need to buy it at 100. They didn't need to buy it at 1,000. They were waiting for the market to mature itself to the point where they could actually get sustainable income from the investment, not just from the speculative gain, but from things like staking, yield farming, all these DeFi-esque type aspects, which all sound really cool and innovative, but they're just a mimic of what happens in regular capital markets. So while we haven't seen, Berkshire Hathaway and Warren Buffett and these guys come on board yet, though I can almost guarantee you Berkshire probably has exposure to crypto already via one of its 1,000 or 2,000 companies it invests in for sure. But we're now seeing, Ricardo Salinas, so third richest Mexican. The interesting thing about Ricardo is that his investments span across dozens of industries. So he owns one of the biggest news channels in the country. He owns cable networks. He owns banks, or bank, I should say, a bank. He owns one of the biggest retail electronic and home appliance companies in the country. So his investments are all over the place. And so him saying that he's putting money behind Bitcoin means that he's now assured, the peso devalues by about 8 to 9% a year on average against the US dollar. On average, it might be around 6, but it seems spikes upwards of 15% devaluation in year on year over the last decade. So he's in. I'm sure a lot of other billionaires in Mexico are in. What it's telling me is that the market has now matured to a point where they know that they can see passive income and yield, not only speculative income. And that's huge because that means that we're starting to come on course with other major markets like equities.
Right. And what about all this Binance stuff that's going on, man? Because there's a lot of everyone's like FUD, but the truth is, Binance is a bit of a pickle, I should say. Maybe not in the short term, but it is in a bit of trouble, right?
So, well, I think Binance has kind of been digging their own grave since day one. In fintech or in finance in general, regulated finance or unregulated finance. Eventually, unregulated finance becomes big enough where it becomes regulated. And the thing about regulation is, if you're, don't do the wrong things for 10 years, and then you try to get a license, you're not going to get one. Simply for the fact that they're going to look at the last 10 years and say, well, you had to know. There had to be somebody in your organization that knew. And at what point did they know, and why didn't they do anything? Or why did they only do, this much? Or why did they only do it on the face and not, why didn't you actually change your organization? So I think they've been digging their own grave for a while. What's happened so far is pretty remedial. So it's not, end of the world yet for Binance. Binance did have a strategy, still does, about opening all these different franchises that aren't Binance properties. It's kind of like the Hilton or the Marriott. They don't own all those hotels. They lease their name, they lease their signage, and they give you all the details of how you need to design the hotel, but it's not a Hilton hotel, it just has the Hilton name. That's what Binance US is, that's what Binance UK is, that's what Binance was in, where were they in, they closed down? They were in Uganda for a while.
Canada,
which
for
was
sure.
Interesting. I can't remember where
and
else.
Also,
Liechtenstein?
Thailand.
Was it Liechtenstein?
Sorry?
Might have been Thailand. Yeah, I think it might have been Liechtenstein as well. Anyway, point is that all these are franchises, which is a decent strategy for Binance. Somebody with some brains jumped in there and said, guys, when Binance's parent has issues, we want to still be able to generate some revenue. So let's open some franchises. That's what they did. And that's probably going to help them in the long run. But I think the parent company of Binance, right now you have the FCA, you've now had 2 or 3 other regulators come out as well around the world to say simply that Binance came out, I think today, to say that there was a rumor that Binance had a headquarters there, or that they don't have a headquarters, they're not licensed there. They've been playing arbitrage with regulators for years now. It's going to come home to roost at some point. Why? Look, I talk about regulation a lot. I'm not necessarily a fan of regulation. I'm just a realist, and I understand how the market works. And the way the market works is regulators do their best to try and regulate the laws that are put forth by the lawmakers. And that's a good thing in general. Why is it a good thing? Well, if you look at crypto where it was 3-4 years ago, completely unregulated, 5 years ago, 10 years ago, there was no volume, price sucked, and there was no adoption. And one of the main reasons we've seen adoption and seen higher price, well, we've seen some billionaires come in, but billionaires only came in because there's a better regulatory outlook. Right. And the only reason there's a better regulatory outlook is because the industry itself started to self-regulate a bit. So having a behemoth like Binance, doing fake volume, dumping on their clients, doing all these bad things and hiding behind the cloak of no regulation is a bad thing for the industry as a whole. It doesn't help the industry grow. And the more and more that maybe Binance survives and they become regulated, great. That would still be better for the industry than them not being regulated and continuing to push out products that should be regulated and continually to get the eyes of the regulator on them. Because when the eyes of the regulator goes on Binance, they assume everybody else is doing the same thing.
Yeah.
And we're not.
No, of course. CoinMetro is a fully regulated and licensed exchange. That said, I think Binance doesn't have a derivatives license in general.
They don't. Binance's parent company holds 0 licenses. They don't even have a crypto license anymore.
Oh, wow. That's crazy.
So, yeah. Actually, there was this rumor, Malta was the big thing, the blockchain island, yeah? And even the prime minister of Malta was touting Binance for a while. Binance never applied for a license in Malta. Thus, they were never granted one. So they hold no licenses whatsoever, and definitely not, and none of their sister companies or franchises hold derivatives licensing either. And they're also now trading securities, not only derivatives, but they're trading
I think that
securities.
was the blow. That was what called the regulators, and they're like, okay, wait a second, wait a minute. This is not a gray area thing here.
Yeah, definitely not a gray area. Absolutely white, or black. I don't know which one it is, but it's not gray, that's for sure.
So people are coming in right now. If you're watching, go ahead and ask your questions. Any question you have in the chat. We are answering today with Kevin Merkel, who is an expert. He's in finances. He's the owner and CEO of a fully licensed regulated crypto exchange and has been in finance all his life. That said, I see Escanor saying hello. I see Juxin saying hi, guys. And we also have a first question here by Juxin. My first question, obviously, is what's writing down. Are we in a bear market? If so, how long will it last?
So good question. I have to say that I don't think we've ever seen a bear market in crypto. So you have to understand that in a normal liquid market, you don't see gains of, 1 billion%.
Yeah.
This doesn't happen because the more liquidity you have, the more there is a neutral balance between buyers and sellers, and thus the longer it takes to see that type of increase in value. You don't normally have everybody on one side.
Right.
In crypto, because through its history, it's getting more liquid, obviously, but through its history, it's been very illiquid. We've seen, yes, we saw 2.5 years or almost 3 years of a correction. But if you zoom out, it's pretty clear that we've never really seen a bear market. A bear market is generally one where everyone it's lopsided selling, and you're constantly seeing lower lows. What normally happens in crypto is we go like this and we see a very rapid descent, and then we range forever. And then maybe we see a rapid descent and we range, but we don't necessarily see a constant lower low.
Right.
And that's why I wouldn't call it really a bear market. I call it a very drawn out correction. And I think we're going to continue. The more institutional money that flows into crypto, the less volatile it's going to get, the less enticing it will be, at least for majors, for the general public. Mom and dad and grandma and your Uncle Joe and your neighbor Fred are not going to be buying Ethereum or Bitcoin because it's only going to go up 5 to 10% a year, and that's going to be boring. And we're still a few years away from that, but that's where we're headed.
Yeah.
And really what's going to happen is your nano caps, your micro caps, your small caps, all your altcoins will still have that propensity to be able to explode because they will be illiquid. And thus most of the retail money will flow into those, and the institutional money will stay inside of those, broader large caps. So I don't think we're in a bear market. I do think we're going to this correction or this kind of range after a correction can potentially last through the end of this year. It could last even into the first 2 quarters of the next year. It's hard to predict. Anybody that predicts anything in crypto, really after they predict it, crosses their fingers, probably lights some incense, says a prayer. Because at the end of the day, it's a market that fundamentals drive every market. So I used to be a technical guy as well. Technicals are great for trying to figure out what's happening with the noise, but they don't predict where the market's going. Fundamentals drive markets. And in crypto, fundamentals, because it's retail based, people hear things like China banned crypto, which they did now for the 837th time, and say, oh my God, China banned crypto. And then everybody goes on Twitter and says China banned crypto. And everybody who doesn't know that they already did 836 times goes ahead and closes their extra leveraged long positions. Gotcha. And so the crazy thing about crypto is the spot market. If it was only spot, we would still be at, probably 50, 60K. We're not, because grandma had 100-to-1 leverage on Binance and got wrecked. And then next grandma got wrecked. And then basically it was just a grandma wreckage all the way down.
Grandgirl or grandson, maybe.
So yeah, I think the lesson to be learned here is don't over leverage yourself. Yeah. And that will happen as we get more institutional, for sure.
So my answer to that is, Joxine, I am more of a technicals guy. For me, and I do agree with Kevin, by the way, but for me, a bear market is a prolonged time under the 200 moving average. And I see when there's a lot of good fundamentals, when there's huge news, really bullish news, but the price just cannot get over that resistance for a while. Now in crypto, a while is depending on which time frame you look, but for me, that is a possibility of a bear market after you lose 80-90% from the highs, obviously. For me, what we are into now is a bear trend with a potential to be a bear market. If we go down under 30K, there'll be a self-fulfilling prophecy, or even panic, or even people selling
There will
out,
definitely
going
be
all the way.
psychological. There'll be psychological pressure to the downside under 30 because everybody's mentioning 30K,
Yeah.
and only really because we've touched it 3 times on a daily chart.
Yeah, and the more you touch a support, the more
resistance. Well, resistance you're creating, and/or the
well,
more
support is when you're going down. That's
pulling
support.
out all that liquidity. So you're basically
And the more you
you're
tap it,
not
the more weaker it
accumulating.
gets.
You are Jesus. It's Friday. You're not accumulating. You are oh my God, distributing. Basically.
One second, can somebody tell me if we're still live? Because I see a loading screen. Tap 1 if you can hear us and see us right now. And I guess that's it, because if I say 2, you can't hear us and see us. It doesn't make sense. So tap 1 if you can. Okay, I think we're back, because I see it loading now. But anyway, yeah. I think technical analysis is mostly for entry and exit points. And
absolutely.
also,
I still use technicals. I mean, it's not that. Well, my technicals are just reading a chart. I don't use indicators anymore.
Price mostly.
Maybe
some averages.
But yes, technicals are important. It's just that technical traders sometimes end up with this assumption that technicals drive price.
Especially YouTube traders.
Yeah. And they
like
don't. I mean, we can tell Tone
lines.
we call up and say, Tone,
I love
tomorrow there's nuclear war in China, your line is going to be meaningless. Is basically.
There's a saying show me the charts, I'll tell you the news, because there's news for the masses and news for the classes. Now you're a CEO of a crypto exchange, you know the news for the classes more than other people, but news for the classes, news for the masses. Show me the charts, I'll tell you the news. Sometimes with price action on the charts, you can tell when there's going to be good news coming out. And this came apparent in crypto before YouTuber pumps. So always before a pump of a coin, you'd see something like stagnant, and there'll be a little bit of a thing there. That's where all the friends are getting in. And then you see the massive pump. And if you don't sell, if you don't take profits there, if it's not Bitcoin or Ethereum or something long term, then you're an idiot. Because it's just, it doesn't make sense.
Exactly.
So I see another, the next question I see here, and we're going to be answering these questions together, but then we're going to be getting into Coin Metro and getting into XCM. This is super exciting, man. I love doing these with you, by the way.
Same.
Crypto Learner, spelled wrong, is asking if you are a Hexagon. And we have a lot of Hexagons on this channel, by the way.
No, I'm not.
And it's funny because you're in Mexico, and I didn't mean Hexico. I meant hex as in the...
Yeah, the token. Yeah. No, I'm not. I'll give you a brief explanation of why. So I met Richard Hart. That's not why, by the way.
Yeah.
But I met Richard Hart. We actually had a good time together. He's an interesting guy. He's a smart guy.
It's very good debater.
He makes everybody aware that he's smart immediately, because he'll basically tell you how smart he is and how much money he has, and whatever. He'll let that out really easily. But he was enjoyable to be around for a bit. We had we had a nice chat at an event. I was actually in Talon. I've met a lot of Richard Harts, and I've also been in my career in finance, even before I was in finance, I've been around lots of different frauds. I've seen them. I've been involved in them as an investor by mistake. And at some point in my life, there was a time when I would actually cherry pick these type of hex and invest in them and take quick profits. And that did actually quite well. This is back in late 90s. Obviously before Bitcoin, before crypto, but these type of programs will always find a new medium to operate in. And I understand that people that support Hex really support it, but that's common for these type of I'll call them companies just to be nice. But when I look, I can name you 15 things, I can name you 100 things that I spotted, but just to name a few, I look at the person, I look at how they present themselves, how they react when they're questioned on something that really deserves an answer versus when they're questioned in more of a trolling fashion and they simply troll back. I look at the way they operate themselves, how they talk to people, what they present about themselves, and then I go down through the business model and I look at really how are they generating revenue? Is it possible? What's the mechanism to generate revenue? And when I went through those 3 or 4, I would stay away personally from Hex. No. It could go 1,000x from here.
I think it will.
But,
not 1,000.
But I believe in the long run, it won't exist.
Well, it's an interesting concept, Hex, because it's and I'm not and please, guys, Hexagons viewing this, don't take my words out of context here. I'm not saying it is, but You know, don't be the next XRP guys. But you know, they're the worst. The XRP and the Safe Moon's even worse than that, actually. XRP is actually getting better.
Another story.
Oh my God, Safe Moon, like that's just dumb. Okay, well, we can talk about it later. It's funny, but when you have Hex, I'm trying to find the use case for Hex. Now, if it's set up as a better money, a better Bitcoin, a better something, I understand that. That's great. There's no denying that it's going up in price. There's no denying that it's a good hedge sometimes. There's no denying that you can make a lot of money. I'm literally staking in Hex. I got gifted Hex from the community. I staked it so I could make videos over time, and I even bought some more because I saw the potential. Okay, so I'm there. The fact that you get penalized so hard, 50% if you take it out earlier and so on, makes you hold. It is set up a little bit like a Ponzi. Now, am I saying it's a Ponzi? No, I am not. But the principle is there, and it's not necessarily bad. That might be why it's working for now. But I don't know about the future. I don't know what happens to it after. I'm still not aware, and I'm still looking for answers. But that said, I do like Richard Hart. I think he's one of the smartest guys in crypto. I think he's one of the best debaters in crypto. And I learned a lot from him. And he's coming back on the channel with Pulse as well. I want to ask him about Pulse and what that's all about. And there's no argument that Hex was the beginning of DeFi in a sense. Not maybe the beginning, but it helped shape up DeFi in a certain structure. And it also did for Uniswap what I don't think Uniswap would exist as it is today if it wasn't for Hex. That's just my opinion. I might be wrong. But I'm very 60-40.
I would agree with that. I would agree with that, Paul. I would say that that's very common because Bitcoin wouldn't exist if it wasn't for Bitcoin wouldn't be talked about right now if it wasn't for Silk Road.
Yeah, true.
And the reason for that is every time there's a new technology, the first guys to take advantage of the technology are usually the ones that do it for the wrong reason.
Right.
And that's just the way things work. So I hope for Richard Hart and hope for everybody that's invested in Hex that it stays for a long time.
5,555 days.
yeah. For me personally, I've seen too many hexes.
Yeah.
The thing is in finance, the more complex, the more risk. And so if you can't explain how Hex works, how the yield is created, and how it's sustainable in 10 words or in 20 seconds, it's probably not. And that goes for any DeFi product. Yeah. If you can say, we loan it out to margin, people pay us 30% a year, we pay 10% back to the people. Boom, easy. Okay, fine, that's sustainable. If you say, oh, well, there's these contracts that admit, an inflationary token that actually depegs the deflationary token, and then what happens is that the liquidity pool comes in, nonsense. Yeah. Absolute nonsense. Even in traditional finance, mortgage-backed securities. If I had to explain that, I couldn't explain it in 20 seconds. Crash and fucking burn. 2008, burn. Because the more complex an asset, I'll give you an analogy, just a quick analogy. So when someone lies to you, they usually give a very complex explanation.
Yes.
So when you say, where were you yesterday? Somebody goes, I was out with the dog. Probably the truth. Where were you yesterday? Well, what happened was I went outside and I tripped and then I cut my knee and then I had to get a Band-Aid from the neighbor and then that guy was telling me about his daughter and then probably a lie. So same thing applies to finance. The more complex the setup is probably because in reality, nothing is happening behind the scenes. Nothing, zero. All that stuff is just a story, a narrative, and the narrative is what drives the price. And the passion behind the people buying into the narrative drives the price until there's no more passion and the narrative dies.
That said, SafeMoon being a lot worse, and I would much rather...
Well, SafeMoon is blatant. SafeMoon is,
I'll tell you what I don't like about SafeMoon. It's, first of all, black hat marketing. They were just lying, literally lying and trying to force Binance to say, yes, we're listing it. And people believe that shit. Yeah. And also the tokenomics are complete crap. I mean, it's literally nothing. And they're coming up with wallets and they're going to start their own exchange, and everyone's getting excited, but who cares if it's a wallet for people that have SafeMoon? It's an exchange for people that have SafeMoon. And everyone's like really brainwashed. I don't like them. I'm not saying the CEO might be faking it till he makes it. That is something that's a possibility.
I would come out and say on SafeMoon that he knows exactly what he's doing, and there's no way SafeMoon is here in 48 months.
Yeah, I wouldn't.
Impossible.
Yeah,
Maybe even
I
24
agree.
or less.
I agree.
So I mean, the thing with this, like you mentioned, when people get excited about stupid things, back in the day, the stupid things people would get excited about for online fraud was we have an office. People would go, oh, well, they got an office, must be real. And then it was, we're going to issue a debit card. And they're like, oh my God, they're issuing debit cards. This has to be real. That was enough to make a fraud last 12 to 24 months on its own. Just those two promises with a photo of some asshole in an office holding a debit card. That was all you needed. And now with crypto, you'll start to see when you look at crypto projects, you'll start to see very similar these promises. Well, yeah, list on Binance. Like, to be honest, nowadays, look what happens when you get listed on Coinbase. You tank. You know why? Yeah. Because you start on Uniswap where there's no fiat. And so people want to cash out and they can't. And then you get listed on Coinbase when there's fiat off-ramp and everybody, Dogecoin, right? They cashed out. Everybody cashed out. Right? So this whole, anyway, you'll start to see these bullet points that will be mentioned by every single program or every single project. And yeah, like I said, I see a lot of that. I see a lot of that in Hex from what I saw in the last 30 years from a ton of other, really smart guys that had really cool looking investments that simply were nonsense. There was nothing behind it. Zero. Nothing was happening behind the scenes except a lot of marketing and a very good salesman.
What about cryptos? Like in the beginning, it's like they even have a website.
Yeah, exactly. Oh, they got a white paper.
They got a white paper. Rebranding. Rebranding.
Yeah. And even when people understood, they're like, yeah, I know it's all bullshit, but the site's really nice.
Yeah, it looks nice.
And that's enough. So yeah, that comes with after crypto. What the guys that are coming on right now in crypto that don't know this yet because they haven't been through this type of stuff. The next thing after crypto, whatever that is, like I don't know, retina scans for money or whatever nonsense. When the next thing that happens after crypto, they're going to notice the same things and say, I lived through this in the early crypto days. I know this. This is bullshit. But see, these guys haven't smelt bullshit before, so they don't know it.
Bet you 80% will still go, 80 to 90% will still fall.
Oh yeah, sure. That's human nature.
I have friends.
Some people start to smell bullshit and realize it's bullshit. Yeah. Others take decades to get there.
Yeah, if that. Yeah. Umar says, sir, kindly tell us about the market. Very distinguished.
Very distinguished. Thank you for calling me sir. Appreciate that. Is it the beard? As far as the market, so we talked a bit about the market. I think everybody wants to know what's happening in the market. Yeah. This is the true point about crypto. Don't try to trade crypto. If you have to ask the question to me of what's going to happen, you shouldn't be trading. You should be hodling. Hold. Why? Well, look. I mentioned this in AMAs before, my own AMAs, I mentioned it in interviews, but I'll mention it again because I think it's important. And it's a very simple fact that most people seem to miss. When crypto was created, it was created to trade like FX. We trade it in pairs, right? So Bitcoin USD, Bitcoin Euro, whatever. Yeah. But it doesn't trade like FX. It trades like stocks. Now, the only reason the stock market goes up 8 to 12% year on year, every year on average, is because people buy and hold. There's pension funds, there's endowments that even though you don't know you're buying stock, $50, $100 from your paycheck every month is going to buy stock, and you're not selling it because you don't even know you own it. It's in a 401k, it's in a pension plan, it's in whatever. That's the only reason the stock market continues to go higher. If everyone was trading the stock market, people would be getting wrecked left and right. You would see, CNN and BBC would be saying, today the stock market fell by 66%. It's the 19th time this month that's happened. Yeah. Nobody should worry. That's what you would see. Yeah. The stock market is created to bring in wealth and give it to the wealthy and take it from the poor. That's exactly what the stock market's created for. And crypto models the stock market, unfortunately. Or fortunately, depending how you look at it. So if you need to ask me the question where the market's going, or you need to look on Twitter to find some chart look at Tone Vase or something to see where the market's going, stop trading. Literally, take your mouse, throw it on the ground and step on it. Take your keyboard, smash it on your face, throw it in the garbage, and then use your phone and buy something and hold it. That's it. Do not attempt to trade. I'm not telling you this because I don't think you can trade. I'm telling you this from the simple aspect that 95% of people will never become a good trader.
Exactly.
Because you need to go against human nature. You need to actually go against human nature to actually be a good trader. And that's very difficult, and it takes years. I said, this is another
3
analogy.
years
I'll give you the last
studying at
one.
least.
To end
At
the question, it's Trading for Dummies, right? So
Yeah.
you have two books in front of you, Trading for Dummies and Brain Surgery for Dummies. Now, let's assume you've read 6 pages of both, because who reads those books, right? You look at like the first page, the 8th page, you check up chapter 12.
I do.
Yeah, Paul reads those books. That's why Paul is Paul. But most people don't read those. They read the Cliff Notes, and they think they're good, right? So for some reason with trading, people will read that book, even half of it, an eighth of it, and start and say, I got this. Yeah. I can do this, right? But the brain surgery for dummies, you know, if your wife fell or your husband fell down next to you and started having a seizure, yeah, you wouldn't crack open a butter knife and say, I got this, because I read 6 pages of this book. Trading takes a long time to master, but it's not the trading that's difficult. You could throw a dart at a dartboard and be a good trader. It's about managing your own ability to stay in when you should stay in and get out and follow a plan and stick to it.
Very hard.
And that is very difficult to teach. It takes lots of time, lots of effort. So you can start on the journey to become a trader, but while you're starting that journey, don't trade, hold.
And that's why on my channel, I do talk about trading, but I don't show charts that much. And all my advice is when you have really huge swings, just take some profits if you are using this to live. Just take some profits. I'm not telling you get out of your hodl position. I'm not telling you to sell. It's not fun. I'm just saying take some profits, because a lot of people who said you just hodl for the next few years, they're either already rich, so they don't care, or they're invested so little it doesn't really matter. But a lot of people that are in the middle, that are investing their livelihood or are hoping, are wishing, are depending on this, right? Which they shouldn't, but let's say they are, should be taking profits. I mean,
too much emotion, too much emotion. So like I have, you know, 7 figures in crypto, and I've had it for a long time, and it's been 8 figures, it's been 7 figures, it's been the higher 6 figures. I could trade it. I don't. I trade other capital for sure, but I don't trade that because there's no reason to trade it. And like Paul said, because I started from somewhere, obviously, and I got to that. It's not like somebody just rained down a bunch of money on me and I threw it into crypto. You know, I worked my ass off for that money, and that money eventually turned into something that is worthwhile. But in the end, and Paul's right, taking profit, taking profit is never a bad thing. If you take profit and it goes up another 10x, who cares? You made money. So taking profit is important. And to be honest, the thing that irks me the most about crypto traders is I'll meet guys that go, yeah, you know, I'm a crypto trader. I'm like, yeah, that's great. So what do you do? Yeah, I've been trading since 2014. You know, I'm like, great. What, you know, they're not a trader. The dude bought and he held. Yeah. That's it. But now he's a crypto trader. But no, you're not a crypto trader. You know, most people that are crypto traders end up getting wrecked. The vast majority get wrecked. So learning how to trade can be a great skill in life. So at some point you could just trade for a living. That's great, but you need to remove the emotion. I agree. So if you're investing something like, I have 10K, I want to buy a house in 2 years, that's a bad move. If you're putting in the 10K because in 10 years or 20 years, you just want to have a bigger nest egg without any specific, you know, I want 200K, I want 500, whatever, that's fine. But if you have a very specific goal, you're probably not going to be happy at the end because what will happen is you'll get close to that goal and then you'll probably get emotional and you'll put more money in and then there'll be a nice swing to the downside and now you're losing money and then you're going to get dismayed and then you're going to capitulate and then you're going to exit with a loss only for 6 months later to the guy who stayed in to be up by 5x. I
agree, yeah. Mostly better hold. Have you seen the technical analysis, the people on YouTube trying to do TA, technical analysis on coins that just launched? And they're like, well, we see the last week we have this history. Like, what is it?
The chart is literally this big.
And you see, I'm on the keyboard like, dear moron. I can't because they're taking advantage of people just so it's a long thing.
As soon as they say rocket fuel, I'm out. That's basically that's my key to exit.
All right, Just Jamar is asking about XRP. What do you think will happen to XRP? Interesting question, by the way.
So yeah, good question. So aside, I won't talk about the XRP army or XRP. I'll just give you let's say the legal, my legal position on XRP. So Ripple as a company and their CEO and I think COO that are both being sued are probably going to be in some hot water. I read through the case. I read through the court files, the papers. It's going to be hard for them to get out of some of those accusations. Some of those accusations being that they sold XRP as a security, that they market made their own instrument only on the buy side. and that's what they did.
Yeah.
So it's going to be very hard for them to get out of that. That doesn't say that XRP is a security. I honestly believe that at the end of the case, they may face some jail time. They're probably going to get disgorged of a massive amount of money. Ripple will probably survive as a company. It may get sold off. They may have to sell it. It may go into liquidation, but it'll probably survive. And I think XRP will survive because I think the judge's precedent will probably be something along the lines of they sold it as a security, but not that it is a security. Because if they say that XRP is a security, Ether as well is a security. Because Ether did an ICO. People now, the problem is that the fact that the CEO or COO sold it as a security is one charge, doesn't make it a security. But the judge would be relying on the fact that the process by which they sold it makes it a security, which means that Ether as well is a security. And I don't expect any judge to go down that road, because that would be a very dangerous road to go down, because at that point, not only would it cause a huge ambiguity in the market and basically scare tactics, and now you have lots of money flowing into this market. You have PayPal and all these other companies pushing money into this market from their retail clients. The regulator's job is to protect retail. If a judge does something that could potentially, make retail lose a ton of money, they know there's going to see some repercussions on that. It's probably going to be overturned anyway. So I don't expect them to say it's a security because there's too much of a gray area there for other assets. I expect XRP to survive. What that means for price, usually they're going to buy the news and sell the fact on these type of things. So in the lead up, if the news is that it looks bad for Ripple, you may see Ripple crash. But when the facts come out, we'll probably see Ripple, regain some footing. Seeing new highs, I don't know. Ripple saw a lot of crazy highs back in 2017, $3, whatever it was. Ripple does not need to be worth that much money. Because Ripple's being used to move money between exchanges for arbitrage. That is the main use case of Ripple right now, or XRP, sorry. It's the main use case of XRP is fast movement between exchanges.
Don't forget the Illuminati and New World Order and new money coming.
Yeah, and those guys. And those guys who are also arbitraging between exchanges, I imagine. So yeah, I don't, the whole thing with XRP and banks kind of fell apart.
Well, no, it's Ethereum now. It's Ethereum literally. I think it's what USDC on Ethereum, or which is on Stellar or something like that. It's an Ethereum on Stellar for some strange reason, probably because it wasn't fast at that point. But that's what they're using.
And you also have things like Quant and everything else that's supposed to be coming out with interoperability between not only banks but central banks and blah 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 blah. So there's a lot of competition there. I think this case has definitely hurt them a bit because a lot of those partners are now pulling back. And even if they win the case, it's going to hurt them in the long run. So I expect XRP to still exist, but I don't expect us to reach those all-time highs if it's on the back of fundamentals. Now,
there'll be other,
and FOMO is a whole other ballgame.
There'll be other coins that will outperform XRP, such as ADA, which I've been talking about ever since, because I got in and out of my road with. I don't talk about what I do with a lot of coins, but I do talk about the ones I actually trade. And everything from the start of the year on XRP, I felt right on. I sold at resistance, bought at support, said other one's going to outperform, bought back in, and I was telling everybody, and I got the worst hate that you could possibly imagine. But I wasn't bearish on XRP. I was just combining technicals with fundamentals and logic. But no one likes doing that because people get blinded when they're into a project. Let's move on. Everyone knows
logic goes out the window when you're a fanboy or a fangirl or whatever. Yeah, absolutely.
Yeah, everybody knows my views on XRP anyway in the XRP army. Let's not waste our time. Gabrielle says, "Hey Paul, hi everyone. I wish I could use Coin Metro in New York." So do I.
Yeah, New York.
I wish you could go.
Yeah. So do I. Absolutely. So I believe, and I could be wrong, but from a regulatory front, right now, in order to operate in the U.S., if you have a physical location in the U.S., you need 104 licenses. And that's ridiculous. So I expect a federal law at some point. I don't know. Unfortunately, I don't know if it's going to happen during the current administration. I hope. I don't think it's that probable, but it could. It depends on really where the market heads in the next 3 years or so. But once federal regulation is in place, that means one license to function as a crypto exchange across the entirety of the United States. Then Coin Metro will obtain that license.
Nice.
For now, to obtain 104 licenses, have to have physical locations in probably 10 to 12 to 16, 17 states. Doesn't make any sense from a business standpoint. And I would love to do business in New York. Look, if you're in New York, hint, hint, you can open up an LLC somewhere else. And then you can gain access to any financial service you want, not just CoinMetro, regardless if they accept New York residents. So it's still possible. You just can't as a New York resident. If you have a company that's not a New York resident,
Then you don't have a problem.
So yeah, I would love to do it. It just doesn't make sense. Right now to get the BIT license, it's about a $2 million endeavor, and it opens us up to one state. Whereas in a few years from now, potentially even less, that same 2 million can be spent to open us up physically to 50 states.
Yeah, makes perfect sense. Crypto Learners is interesting why you say it will not work. You see Richard Hart, but don't speak about Hex. It's, well, I personally like, I think Hex can make you rich. That's why I'm holding Hex. and you know what? The use case is making you money. That's the use case. The thing is, how long will it last? Will it last more? That's a different case. But it can make you money. I'm not going to lie about that. Carlos Cruz says, Go Gwen. I don't know what he means. Go Gwen? Go Guan? Guan. Maybe it's the Jamaican. Guan! There's no question. It's just Guan.
No idea, but awesome. I don't know.
Okay, Kevin, this is a good one. Crypto Learner. Kevin, maybe you want to go live with Richard Hart again and let him explain how Hex works.
I have no problem going live with Richard Hart. So
Kevin will take on anyone.
I've never been. You said again. We've never actually been live together.
Yeah. I have been live with him a couple of times.
We discussed it. We discussed it before. I know how Richard will approach it. I mean, Richard is a master of evading questions he doesn't want to answer, and basically trying to turn those around on the person asking the question, and he'll immediately go into a defensive attack. And he's good at it. So I'm fine with that because I'm a pretty good wordsmith myself, and I'm pretty sure I would do okay. So that's fine. I would definitely, I would love to talk to her. I think Richard is a really cool person.
Shall I set that up? Kevin, shall I set that up?
Set it up. Set it up.
Let me try and set it up because it's gonna be fun. I'm gonna have Richard Hart on this channel pretty soon, and then I'll set it up with you after that. It's gonna be amazing.
I think Paul just hit it on a nail on the head, and that is that the real fundamentals behind Hex and many projects like Hex are its ability to bring in new money. That's it. New money stops. Well, that's it. FOMO dies. Price discovery slows. But to be honest, to be fair,
might take 20 years.
To be fair to Richard Hart and all the Hexians, that's the same with every other asset on the planet. The difference is Bitcoin doesn't tell me that it has some complex underlying mechanism for how it's going up in value. Neither does Ethereum. No one does. They simply say, this is the asset, pay for it what you want, set a market price, and the only thing we're doing is processing transactions. And that's honest, and that's straightforward, and that's understandable. Like I said, it can be explained in less than 10 seconds. You cannot explain Hex in less than 10 seconds. And that's that's a problem for me. It's a problem because, like I said, in finance, complicated systems fail all the time.
I see a really good question from Gabriel, but right before that, analogy. Tell me how a spaceship works in 10 sentences or less, or it's a scam. Well, Elon Musk could answer that in 10 sentences or less. Yeah,
a spaceship uses propulsion to drive things to space. So you don't have to be Elon Musk to answer that question. Now, how exactly it works, of course you can't explain that. You couldn't explain how a blender works in 10 seconds if you wanted to break it down to the electrical mechanism that powers the blender. But I said about finance and about fintech. I didn't talk about spaceships. The fundamental idea, you can't explain how Bitcoin works in 10 seconds if you want to explain it from A to Z, how mining works, how it's distributed. But you can explain what Bitcoin is. It's a distributed network that moves value. That's less than 10 seconds. Boom, that's done. That's exactly what it is. Explaining exactly how it works is but nice try. Nice try.
Gabriel says, Gabriel retry. What do you? No, he didn't retry. There's another one. What do you guys think of Theta? I personally like Theta. I don't think it's the right time right now. I think right time on a trading point of view. I'll let Kevin get into it. On a trading point of view, I think altcoins in general. They'll have their time again, but right now you want to be in Bitcoin and Ethereum. And the reason is, if they go down, they'll go down less than the other ones, and you can use those to buy other coins after. And if they go up, you're still involved in the cryptocurrency market, and you can always get into altcoins later. Plus, money tends to go to the big boys first and drip down. And since we reset it, in a sense, for lack of better terms, those are the projects we should be looking at. Now, what do you think of Theta in general, Kevin?
To be honest, so I got berated a bit by somebody in our Telegram group a while back for not listing Theta. Um, and there's so many things we haven't listed. So, you can add that to the list. There's a much longer list of things we haven't listed versus things we have listed. And it's always going to be the case. To be honest, I haven't looked at Theta recently to give you any real idea of what really my thought process would be behind it. What I know is that every token is going to be challenged over the coming years because there's going to be more and more businesses that come in, you doing the same exact thing. And being first doesn't always mean you win, and being last doesn't mean you lose. So there's going to be protocol wars. There's going to be wars within different industries. Different assets are going to have different tokenomics. Some tokenomics are going to win, some are going to lose. So from that aspect, I would say, and to be honest, to be fair, I actually had to look up Theta real quick because I don't even remember the basics.
It's a streaming coin backed by the person that used to be into YouTube, and it's actually
okay.
It's a futuristic play, I would say.
Yeah. So obviously streaming, we're doing it right now.
Yeah.
And
on Zoom.
streaming is
where
we're going to be for the next years. There will be something new. Streaming is kind of old at this point. So there will be new technology at some point. Who knows what we'll call it? We'll call it beaming. And it'll just be peer-to-peer direct connection with no servers or something. That's probably going to come in the future. But so look, YouTube, massive. Who care? What percentage of the population care that YouTube isn't distributed?
No one. I don't care.
Nobody.
I prefer.
So there's a very
regulated.
small subset of the guys who get bounced off of YouTube because they violate their rules and say, oh, this is bullshit, it shouldn't be centralized. Of course, if you went to a dinner party at those guys' house and said some bad stuff to their wife or husband, they'd probably kick you out of their house because that's their rules.
Yeah.
And then I could complain that their party should have been more decentralized. So I think that all those arguments are kind of nonsense to me. Because I know where they come from, because as a business owner, a lot of times you do something, you're real passionate about it, and you think that it's super important. And then you go out and ask the populace, what do you guys think about, gingerbread houses on the blockchain? I've been at this for, 10 years. I think it's going to be awesome. People go, what? Who cares? And the vast majority of the public don't care about decentralization. They could care less about their data rights. Now that's going to change over time. Yeah. It definitely will change. It hasn't changed yet. So that means it's going to take a lot of money for something like Theta to take market value from something like YouTube. That doesn't mean they won't get there, but I would agree with Paul here. This is a long-term play, not a short-term. Now, FOMO and hype can definitely make you money in the short term. But as Paul said right now, because most people are wary of what's happening with their larger portfolios in Bitcoin and Ethereum, they're going to be focused there. They're not going to be focused on pulling money out of those assets at a low. Well, not really a low, let's be honest. I mean, a low as of, December or January, but in an interim low, they're not going to pull out profits to pump another asset. And unless Theta is spending a lot of money to bring in new viewers, to bring in new people to that token, they're not going to see a massive influx of capital into the token either. So probably for the short term, I wouldn't expect big gains from almost any token, to be honest, unless they make big news or they break into a new pocket of clients.
Yeah, and keep in mind that when Bitcoin goes down 80%, 90%, and it will, at some point it will. It's what I like to call a bear trend, bear market. A lot of these coins are going to vanish. A lot of coins are not going to be, the top 10 is going to look very different. Every 4 years it looks different, roughly. Yep. So you got to, Theta was, I had a pretty respectable position, and Theta got out before the big dump. I was already changing into Ethereum and Bitcoin, and it was documented on my channel. I was telling people to do that actually. I would wait. Now, at this point, though, I want to transition. I want to go back into the chat in just a second, but I want to talk about XCM token. That's Coin Metro's token, which you can now stake. And there's a big difference between what people are promising staking is and the dangers, and what Coin Metro, what we are doing. And for full transparency here, I am working for Coin Metro. This is not a paid interview. This is me. This is my own views, and we already have a few differences with Kevin, especially on TA point of view of things. And so, but but we do agree on XCM because I love XCM. I love the Coin Metro. I literally asked to work for Coin Metro. So Kevin, please tell us a little bit about XCM and XCM staking.
Sure, absolutely. So we just talked about like kind of micro and mid caps and small cap tokens, and the fact that right now most of the focus is on Bitcoin, Ethereum.
Yeah.
That's the same for XCM for sure.
Yeah.
So we'll throw our own token into that same basket. Not saying that it's the perfect time to get in an XCM either. However, I think there's a difference when you look at utility. Utility tokens are this thing that we created in 2016, 17, actually 14, but really started to come to light in 2016 or 17. The industry created this idea that you could have a token that had some type of feature set that gave some utility to that underlying asset. And that was a new concept because before that you had rewards and you had point systems and all these things, and that's great. But they were closed systems, and they were closed systems that gave you a very specific type of reward, and there wasn't any monetary value behind those rewards, and there was no way to pull monetary value out of those rewards. So utility tokens are quite cool. In bear markets, one of the utility tokens that does the best all the time are exchange tokens. Why? Yeah. Well, even in bear markets, people need to sell.
Exactly.
And in bull markets, they're buying. And volume, if you look at the 3 years of the bear market, yes, we saw spikes in volume when we started to see more activity, when people were buying in towards the beginning of this year, et cetera. But if you look at the average volumes across most exchanges, they were pretty steady. So, when you have a bear market or a bull market, generally you're still seeing the same amount of volume and still around a 51 to 49, 52 to 48% of buyers and sellers. So people still buy in a bear market, people still sell in a bear market. You generally just have a very neutralized amount of buyers and sellers. And when people capitulate, there's just a lot more buyers. Simple as that. Not that much more, maybe 10% more, et cetera. So over the long term, buying into exchange tokens makes sense as long as the exchange has a decent set of tokenomics that derive its value from the usage of the exchange. And that's XCM. So XCM has a tokenomics that derive its value and the demand on the token from the actual usage of the exchange. The more people use the exchange, the more people use services tied to the exchange, the more XCM is being purchased, more XCM is being vaulted, hopefully burned at some point. Same effect though, pulled out of the circulating supply. And of course now we have staking. So for those that don't know what staking is, it's a cool sounding word that means interest-bearing account, basically. It's like a CD at your bank or a savings account at your bank. You lock some money away, they give you a percent in that same money. If you lock USD, they give you some extra USD. Yeah. If you lock Euro, well, they're probably gonna take Euro from you at this point, but at some point 10 years ago, they actually gave you Euro at a bank.
Yeah, I remember
Euro
that.
in the bank. So same thing with staking. You put an asset, you stake it, you stick it in an account, you lock it away, you get some more of that asset over time. Most staking programs, most DeFi nowadays is bullshit. And it's a confidence game. That doesn't mean it's a con. It means it's a game of confidence. They want to gain your trust and your confidence. The way they do that is they give you a ton of money up front. They say 30% a year, 20% a year. Yeah. That's not sustainable. Now, why, Kevin, would you say that's not sustainable? Come on, man. This is the new world. We're changing things. Things are so great and new and innovative, and crypto is so much better than traditional finance. Well, I'd love to believe that and say that it's true, but it's not. The major difference between traditional finance and crypto is access, and that's what's amazing. That's why I'm here. I wouldn't be here if it wasn't for the access. Access means that anybody can gain access to DeFi, whereas not many people can do a back-to-back loan between Japan and South Korea for $10 million overnight to gain themselves 1.25% in interest. Not many people can do that. Actually, pretty much nobody can do that unless you're a bank or a financial institution and you have operations regulated in both of those countries, which dwindles it down to a very small amount of people. But in DeFi, you can do that. You can do something similar to that. We call them back-to-back loans in traditional finance. Here you would call it a fast loan. And it's the same thing. There's no different. In fact, they move just as fast. The difference is the access. So the access is very important, and that's why I'm in crypto. And staking means that you can put assets up, you get more of that asset. Why do we give 1 to 5% rather than 1 billion%? Because we want to make it sustainable. Right now, we're paying it out of treasury. We're not lying to the public. We're not telling that there's some super complex mechanism behind the scene that's generating this XCM revenue, and then we're paying it out. No, we don't do that. We're paying you from treasury. I'm paying you out of my pocket. So you give XCM, you buy XCM, thank you for doing that, for supporting the ecosystem. You lock it, thank you for doing that, for taking it out of circulating supply. For that, I'm going to reward you with a little bit more XCM. The goal, however, is to make it sustainable. And to do that, we need a mechanism by which that locked XCM can actually derive revenue to the company. How do we do that? Well, that involves allowing XCM to be put up as margin, as credit for margin traders, who can then trade additional margin, pay us the margin fees, and we distribute those fees back to people who are staking. That takes time. It also takes time to build up the treasury management that's involved in order to get yield from other assets that can also underpin XCM staking. All that's in process. But we like to be realistic here at CoinMetro. I don't like to lie to people. I don't like to make up crazy stories, even if they sound really awesome. So we like to be straight and up front. XCM staking pays less than other staking programs now, sure, but it is sustainable and will be sustainable long term. And as we make it sustainable, we will pay more interest, not less.
Yeah, and also XCM, CoinMetro being an exchange, it still has a lot of room to grow. And
Absolutely.
it can take market share, and it will take market share because we're doing everything by the book, which is very
XCM
rare in
token,
crypto.
the XCM token on January 1st this year was hovering around 3 cents. It made a high of over 60 euro cents, and now we're roughly around, I think we're 22, 21, 22 euro cents. Still up about a 7x from the beginning of the year. And if you look at the volumes, yeah, right now, if you compare our daily volumes to those of, the top 10, 20, 30 exchanges, we have a lot of room to grow, and we will definitely grow. Now, don't take the top exchange because we all know that volume is 90% nonsense. But look at things like Kraken, look at things like, those type of properties where we know that those guys are reporting legitimate volume, that they're not advocating wash trading, nor are they dumping on their clients. So we have a lot of room to grow. We definitely can grow. We've grown many, many, many times over in the last year. In the last 6 months, we've had tremendous growth. If we continue on that path, we'll be fighting for that top 10 spot very soon. And so, yeah, obviously you can make comparisons to things like BNB, which I don't like to do because I think we are so much different and better in many ways than Binance. We actually support our clients and we want them to make money, which is probably the main reason why we're better than Binance.
And we answer the phone.
But at the end of the day, you can compare Binance. There's a lot of FOMO and hype still drive this market. So the more awareness that XCM has, the more hype and FOMO that gets built up inside the community, the more people buy XCM. But as well, the bigger we are, fundamentally, systematically, because of the way the tokenomics work, XCM goes up in price as well. So.
Plus, CoinMetro has never been down as an exchange, even when all the other exchanges was closing down. And I urge everybody at this point, after the interview, there's links down below to CoinMetro, the website, and also the YouTube channel. Please check it out. Subscribe to the CoinMetro YouTube channel because Kevin talks there every week. He does these 1-minute videos like I do, but they're actually has a lot more technical information than I do. And there's a different perspective. You can listen to us both, and some people will say one thing, other people will disagree, and so on. So it's fun. But also, it's interesting in the sense that he does an interview every week on Friday, answering AMAs, all questions, any questions, just like I do on Sunday. But he does have vast amounts of more experience than me in financial markets and in crypto markets and so on. So please go ahead and subscribe to that channel.
Just want to point out one thing, Paul, is that the exchange has gone down like non-voluntarily. Things do happen, but we've never taken it offline voluntarily because of price, which is something that Coinbase, Binance, Huobi, and every other exchange have done, simply because they take the other side of your positions. Meaning when things are lopsided, so everybody's selling or everybody's buying, they're getting killed, and thus they take things offline because they don't want to lose any more money and let you make money. We, however, don't trade against our clients, never take the opposite side of a transaction, and thus we stay open when there's volatility because it means more volume.
Well, I meant during volatility, by the way. I didn't mean, obviously the website can go down a little bit. It's only, I think all websites can only be 99.8%.
I mean, the internet is the internet, so things happen. But we have never taken and never will take the exchange offline voluntarily because we are losing money. Because we have aligned our goals with that of our clients rather than the opposite.
This is actually funny. Safe Moon Army 7 says, Paul Democritus is a Safe Moon whale. He knows for sure. He told me. Underneath, I see even Julian saying sub Safe Moon Army. Glad to see you here, buddy. Are you broke yet?
Yeah. So somebody asked me about Safe Moon at some point, and I looked on their website. The first thing I read was, we minted X amount and then immediately burned this. And that I didn't even have to read the rest. That's like, that was it for me. That was the end.
All right, we got more hex things here. I don't think we should go into too much detail on that. We've already talked enough about it. Escanor says, saw your videos about Soros entering BTC market. Talk about it. We are in panic. Why almost every time when BTC goes down, Cello and okay, these are different questions. All right, let's talk about Soros getting into the market because he's panicking, he's shitting his pants basically. Let's see if we can help Escanor out here.
So yeah, I guess most people know the story about George Soros, 1992, shorted the British pound, almost to the ruin of the British Empire.
No.
Pocketed $1 billion on that trade. Well, I should say trades. It wasn't one trade. Now, so he is known as a notorious short seller. However, he also that's Soros himself. So Soros made those trades. He didn't have a fund at that point. Well, he did, but it was his fund. He managed it. He was, only 150 at that time. Now he's like 320. So, he's too old to be managing the fund at this point. I'm sure he sits on the board, but there's no way he's managing it.
But so he's not standing.
That board, that fund has already invested in exchanges. They've invested in custody companies. They've invested in certain infrastructure projects in crypto. They have no reason to want Bitcoin to fall unless they're accumulating. And that's the one thing you don't need to worry about. If you're a long-term holder, that's actually great news for you, because the fact at 60K, much less institutions were going to come in and accumulate. At 30K, they're accumulating more. If Bitcoin were to fall to 15, they would accumulate a ton. And so would some retail as well. But most retail would get out. But institutions would be accumulating massive amounts. So they're already invested in the infrastructure. They wouldn't do that first and then crash the market. Doesn't make any sense. Now, any good trader will tell you, though, I may have a portfolio where I hold assets, even stocks. I might have GE or Apple stock or whatever, but I'll still short it if there's an opportunity. So them shorting is not a bad thing. Look, shorts provide liquidity. If shorts weren't allowed in the market, there was no synthetic shorting, the market would be 80 times less liquid. It would be so illiquid, you wouldn't be able to cash out of a position. Because remember, when you're buying, someone else has to sell. And when you're selling, someone else is buying. So the fact that they want to short, fine. Do they want to short? I don't know. I generally think that their long-term vision is probably to hold like everybody else, because if they would have held for 12 years now, they could have put 100, if they put $1 million in, imagine if they bought $1 million worth of Bitcoin at $1. They'd be worth more money than the entire planet right now. And so I think they're smart enough to see that holding is the right avenue, but they're investing in the infrastructure, which tells me that they're going long-term. If they want to short, they want to make some money shorting to just accumulate more, have at it, because that means the next ride up is going to be much, much bigger than it would have been if we idled at 60K.
Nice. Very, very good answer. Why almost, I'm going to leave that answer to you. I think I can't explain it any better than that. No, there's nothing I can say. Why almost every time when BTC goes down, Cello and Fourth pick up? Well, Fourth doesn't always pick up because I own Fourth. It's actually gone down a lot from its highs. But Cello is something we can talk about, Kevin.
Is Cello, was that Celsius's token? I forgot.
I think Cello is Celsius, yes.
Yeah. Well, Celsius is a lending platform. I guess we know that. Check it for me, Paul.
It might be a mobile app.
All right, let's see. Because the answer will be slightly different. I can answer both of them, to be honest, but... well, I know Cell. I think Cell, CEL, is the Celsius token, right?
Yeah, so Cello is... Let me just make sure I have the right size site. I'm going through CoinMarketCap here.
I mean, in a broad perspective, many assets...
Cello is global payments infrastructure built for mobile.
So many assets. Look, there's always going to be an ebb and flow in every market between macro caps, so your large caps, and your small caps, which in stocks we would call those blue chips, right? Everybody else, like the Dow 30, and then everybody else, the Nasdaq 100, and everybody else. And then in crypto we have. You have your majors or your miners, or you have your altcoins, and you have Bitcoin, right? I would say, obviously Ethereum isn't Bitcoin, but we can encapsulate kind of Ethereum and Bitcoin into one bubble and call those majors. And then you can have your miners, right? That's everybody else. So in all markets, there's going to be ebbs and flows between money going into blue chips. Normally in times of fear, in times that people don't know, there's too much volatility, they don't know what's going to happen with the market.
Yeah.
Money will flow in the market into blue chips, into your bigger pools, because they feel safer there. And they expect those to go up because that's where most people come in. That's most of people's on-ramp. That's where they come into the market. Just like Tesla has almost become kind of an on-ramp into stocks, because young people buy Tesla because they saw Elon Musk smoke a joint on Joe Rogan, and they go, Tesla's awesome. They came into stocks with Tesla, and now they probably bought other things, but they came in through Tesla.
Exactly.
So same thing here. You come into Bitcoin, you come into Ethereum, you branch out. And so when Bitcoin and Ethereum are mooning, when they're going higher, people stay there. As soon as they stop and they range, they take profit or they exit, and they push money back into altcoins. It can also be the reverse. People that are in Bitcoin and they see a loss happening, they say, well, I'm making a loss. These to me to regain this loss from 60 to 30, Bitcoin has to go back to 60. So in their minds, even though that's still it's 100% increase, right? It's the same 100% increase if you go from 2 cents to 1 cent. But in people's minds, psychologically, 30,000 is a big number. So they exit and they go into small caps they like, because they say, well, this only has to go from 2 to 4. And that's so much easier. It's not. But in their mind it is, so they move and go in. Now, with a payments app, there could be something behind that, in the fact that Bitcoin going down in price may lead to that payment company doing many more transactions, especially depending on what type of transactions they're doing. And that may lead people to speculate that because there's more volume flowing in, even though price is falling, that they're going to run into this payment app. But I tend to think it's the same ebb and flow. That ebb and flow is always going to happen. So you're always going to be you're always going to have in markets correlation, delayed correlation, or reverse correlation, which is still correlation. So there's always going to be correlation across markets. You can see that in the NASDAQ, you see the Dow, the FTSE, the CAC, the Nikkei. You can even see it in FX. And you're going to see it in crypto forever. We're just going to see a decoupling of, we used to see correlation literally like this. And now kind of what you see is this. You see some delayed correlation, but that's going to be a constant forever.
Pretty much. Paul and Kevin with their funny mimicry. You should also add puppets. Gabriel says, this guy's speaking the truth just like Paul. Well, we have a lot of things in common. We both bald, we both have beards, and we both like being honest, brutally honest, even if it hurts.
Yeah.
Are you planning to add any new tokens to CoinMetro by Escanor?
Yeah, we actually added a ton this past. I think we added like 9 in a week, which is pretty much
growing.
Yeah, which is kind of we had 9, now we have 18. I mean, we doubled it in a week. So yes, absolutely. We kind of did this on the hush hush. We just released them, boom, done. We are going to have a much more aggressive schedule. I'm going to explain this real quick because I think it's important, especially for those that don't know CoinMetro. Think of a Venn diagram. If you don't know what a Venn diagram is, 2 circles, right? Wherever the circles meet, that's your sweet spot. Everything else is kind of important, but not the sweet spot, right? So for listings for CoinMetro, we have 1 circle that's coins that have no fiat on an off-ramp and have a ton of volume with a great community, right? Or sorry, have a community, but maybe not volume, right? The other side is high volume, and they already have fiat on and off-ramps, but they also have a great community, right? Where those 2 meet are tokens that have no fiat on an off-ramp. They have volume, maybe on a DEX or something like that. They have a great community, but they have no fiat. That's what we were focused on in the beginning. That's why it took us so much time to kind of bring on new listings. Now we're starting to go out on the edges of that Venn diagram. But our sweet spot is always going to be the middle. We want to really focus on working with companies like Cadena, like Parsec, like Flux, to be able to do things with them, create products with them, help them solve some of their problems. They help us solve some of our problems. We create new types of services with them. They create new services with us, and we work together. That's the key for us. But we also understand, and we've understood this before. It's not like we didn't understand it. It's all about resources, guys. As we bring in new resources, like Paul, for example, we're able to do other things. And now that we have more resources, we can focus on listing things on the outer side of that Venn diagram, but we still want to crush the middle, and we're still working constantly on getting really great partnerships.
I'm sorry. Okay, Tulia Adala is asking why I cannot use Celsius in UK. You can't even download a white paper in the UK anymore unless you use a VPN, by the way. It's really funny from Bitcoin.
Celsius.
Yeah, why can't I use Celsius in the UK? I'm not sure about that, to be honest with you.
Regulatory. So the thing is, as you grow, there was always a regulatory issue with collateralized lending and borrowing. and maybe even with tokens tied to it as well in the UK. But the thing is that as a company, you can be under the radar until you're no longer under the radar. Celsius is big enough now where they are absolutely not under the radar. And look, I mean, look how long it took for Binance to get a slap on the wrist from the FCA publicly. I guarantee you, they have letters from the FCA somewhere in like East Guam or wherever they're not located today. And they've probably gotten them for some time, but this is the first public kind of announcement we've gotten out of a regulator. I'm sure we're going to see many more. And this is the same thing. So I think Celsius just took a step before the regulator made an announcement to pull out. I guarantee you they're probably going after licensing. They're probably going after EMI licensing. They're probably going to go after maybe even some other form of financial licensing to allow them to offer product again. But they're doing it the right way. So hats off to Celsius for that. Unfortunate for you that you're in the UK and you can't access the service, but hats off to them for doing it correctly rather than waiting and trying to evade, which is something collectively that's not going to help us in this industry.
Interesting. See, I wouldn't be able to answer that.
Yeah.
So this is actually funny. Evan Julian says, "Hi Paul, hi Bill Burr. Can you guys?" This is why I was laughing before, by the way.
Yeah.
Can you guys tell me an altcoin to hodl and forget for years to come, other than Ethereum, of course? Well, my answer is Bitcoin. I don't know what.
Yeah, well, altcoins. I think she said altcoins. Yeah.
Oh, altcoin. Well,
Did she?
Okay. Well, obviously, this is also because I'm working for the company, but so I know what's going on an inside point of view. XCM would be one of them. Link may be another for me, and possibly ADA, and hopefully it goes the way it goes. But what about
usually I don't like to give recommendations, not because I can't. I do to friends sometimes offline. You know, I whisper in their ear.
Tell me. Everyone else don't listen.
But look, when we list things, yes, we've listed a slew of things in the last week, and a lot of those are not because we believe necessarily that they're the future, 10x or 100xers. They have volume, and we've been asked to list them. Yeah. But in the past, when you look at things that we've listed, like Quant, like KDA, like Hathor, etc., Parsec, we listed Parsec at 2 cents, 2.5 cents. It hit €2. Listed Quant at €3. It hit a max, I think, at 70, almost 80. I think those still have a bright future. They're cheaper now than Quant is more expensive than it was, but everything else is a bit more cheaper than it was in the past. I think what you need to look for, there's a combination you need to look for, right? And it's not that hard to find the combination. You don't need to be an insider. You don't need to own an exchange. What you need to do is get involved in the community. You need to find out how the community's treated, how the community looks at the token itself. This is the same thing you would do in stocks, but with stocks, you look at fundamentals a different way. You look at reports and you look at filings. You don't have that in crypto. So you look at the people. You look at the people behind the project, and you look at the people supporting the project. It doesn't need to be a massive community, but if the community is insightful and they can answer the questions almost better than the people that run the program are answering, that means that the people who run it have already explained it so well that the people that support it can answer the question. That's a very good sign. That's something I look for. Another thing I look for is just, what are they doing? Do we need what they're doing, right? Because lots of people make things that sound really cool that nobody needs. That payments for Bitcoin, for example. I don't want to be one to shit on somebody's parade, but Bitcoin is not made for payments. I don't care what the white paper said. It doesn't. Bitcoin Cash isn't made for payments either, so don't get excited.
Yeah, it's not called Bitcoin Cash anymore. It's going to be called an eCash or something like that.
Yeah.
Which is a good move, actually.
The thing is that at the end of the day, to compete on the payment level globally, you need to do 100,000 transactions a second. And no one's doing that yet. So that when people come out and like there's a new token that wants to accomplish something in payments, I don't really pay attention. Now, if they're working on infrastructure to provide immutable data for payments, or to connect payment providers into some type of immutable data, like Quant, for example. Quant is interesting. Why is it interesting? Because it's an API that connects it makes interoperable different chains that can eventually create an immutable data center that can connect really fast payment systems and really slow payment systems and make them all work together. That's something that's unique and that's cool. So I look for something that I think actually is needed. I look at the community, and that's how I make a decision. And many times, I'm on Twitter, so I gauge Twitter. I don't Twitter's probably less than 1% of my decision making, but it provides a lot of data. So being on Twitter is also important. But Telegram is a big source of knowledge, but you need to make sure that you can weed out between truth and kind of forced truth, right? Shilling. And that's a skill you got to acquire over time, I guess.
Yeah. All right, Eskimo, that's not a question. Theta Fuel and Kusama, but yeah, those are good coins. Crypto Learner. Hex is a CD currently on the Ethereum blockchain, soon on the Pulse chain. There you go, 5 seconds. Okay, fine. Batcoin, explain in 30 seconds, please. Okay. Bat in 30 seconds. Bat. That is
Bat. The browser, the Brave browser.
Yes, the browser.
It's a way to incentivize using Brave's browser. That's it.
There you go. Immutable smart contract, no admin keys. Oh, okay. That's just the Hex part. All right, Eskimo, Paul, do you think people who bought crypto for less, like say Ethereum for $80, will only be people making the big gains, and people buying at 1,700 will struggle more? Well, I had Bitcoin, I had Ethereum at $80, but you have to understand that the people are going to be buying Ethereum at $1,700. The same question is going to be raised in a few years about, do you think the people buying at $1,700 are the only ones going to be make money, except the ones buying at $10,000? And my target for Ethereum, if this bull cycle continues, if this bull market continues, I'm seeing Ethereum at 5 to 7,000. That was my target, with a top about $10,000 conservative in this bull run. So I don't see why not. But those are realistic
I'll
gains.
jump in on one thing there. So learn a page from Warren Buffett. So think about what Warren Buffett did. Warren Buffett wasn't great at picking tops and bottoms. He still isn't. What he was good at was finding assets that give passive income, dividends. So he bought Coca-Cola, for example, at something like 60 cents. He now makes 4 times as much per share on dividends on a yearly basis. This is why passive income in crypto is very important. This is why real staking and real passive income is important. Yeah, the guys that bought at 80 obviously, if it goes to $1 million, they still made more money than the guys who bought at 1,700. I mean, that's simple math. But who fucking cares? Because if Ethereum goes to 10K, and I believe it'll get there as well, so I agree with Paul on that. So if Ethereum goes to 10K and you bought at 9K, right? But you start getting passive income on 10K Ethereum, then you might have not made the speculative gain. So you lost out on that. Boo-hoo. But for the rest of your life, you will be gaining passive income as Ethereum rises in value. And that is far greater. Warren Buffett would live under a bridge if it wasn't for passive income. If you look at his stock picks and when he's bought, yes, if you look, he bought Coca-Cola 40 years ago. Of course it was cheaper then, no shit. But if you look at when he bought and between like the 5-year period, he never picked a good top or a good bottom to sell or buy, ever.
Yeah.
Ever. But he picked great dividend bearing stocks. And that's why he's a billionaire. So take a message from Warren Buffett. Who gives a shit about your buy-in price? Buy things that you can get passive income on, period.
Great explanation, man. Escanor, why Binance is getting in trouble with so many governments? We already covered that earlier in the video. Just go back and see that, my man. Thank you for all your questions, by the way. Love them. And Paul, will various governments make their own crypto to stop coins like Bitcoin and Ethereum? I think it was you who spoke about China issuing their own cryptocurrency. Well, it wasn't me originally. There's other people talking about it. I think there's more of a Kevin question, though. Kevin, you're here. You're our guest.
Sure. So CBDCs, central bank issued digital currencies. Look, some countries are going to try and diminish the power of Bitcoin in their country because they're going to say to protect the public. Really, it's because they're authoritarian regimes and they want to protect their own power because they hold power over their currency. Things like China, places like Venezuela, China, etc. The vast majority of the world will go CBDC. Every country in the world will have a central bank issued digital currency. Does that mean they'll all be on blockchain? Probably not. Does that mean that they're going to be mintable and you're going to trade? Probably not. Does that mean they're all going to be available on every cryptocurrency exchange? Maybe not. The reason why they'll do it is because it's immutable data. It's because they have data. They have more data on you, and cash is a history. Most, they talk about money laundering in crypto. It always makes me laugh, right? Literally, the Secretaría de Hacienda Pública, which is the secretary of the IRS, the tax authority here in Mexico, came out after our friend Ricardo Salinas, third richest guy in Mexico, 16th in the world, like Paul said in the beginning, came out and said that Bitcoin was used, that crypto was used for criminal activity. That was its main use case. That argument is literally 10 years old. It was bullshit 10 years ago, as bullshit now. And it just shows how inept people of authority can be. But they will come to realize in Mexico, just like they realized everywhere else, that wait a minute, what's really used to launder money? Cash. What if we got rid of cash? Well, people wouldn't let us do that. Well, what if we made cash digital? This way they feel like they still have cash, but we know what they're doing with it. Oh my God, this is amazing. Wet dream later, they make a CBDC. Everybody's gonna do it. Will it diminish? Are they doing it because they want to diminish Bitcoin? Most won't. Some will, some are, China. But at the end of the day, the public has the option. They will still have the option. You can't stop a distributed ledger. So just like they couldn't stop internet with the VPN, everybody in China just uses a VPN. The great internet wall of China can literally be dismantled spending $1.99 a month on a private VPN. And so they're not going to get rid of Bitcoin in China. Bitcoin still exists. Have volumes fallen in China? Absolutely. I predicted that in 2016, in 17. You know why? Because the only reason there were volumes is because people were evading the law by moving more than 50,000 US dollar equivalent of renminbi outside of the country. Now that they can't do that so easily, volumes tanked, but it still exists there. So the future is just having the ability to think, do you want a digital inflationary or a digital deflationary currency? And you pick the one you want to use. That's the future.
And the way I see it, Bitcoin will be the people's money. And let me explain why. When you have CBDCs, realize that with a click of a button, they could freeze your bank account. With a click of a button, you go to protest somewhere. Oh, we don't like that protest. Click of a button, boom, you can't buy or sell. It's too much control over your own assets, which are not real anyway. And I do believe that in a revolution is going to start after this happens, or there's going to be a side market, if you will, which will probably may or may not be illegal, but a bartering system with Bitcoin, and that Bitcoin may be the only way to survive outside this in certain countries. But that is
you know what I think will happen? You know what I think will happen, Paul, is that some smart guy will make basically distributed dark pools of CBDCs and then make wrapped CBDCs on another chain.
On Bitcoin or on whatever.
Where they can't be censored.
Yeah.
And the government won't be able to figure out where the wrapped asset is basically connected to, and so they won't be able to freeze the pool either. That's what's going to happen. But yeah, I agree with that.
We need tech. We need cryptocurrency. And I'm not saying we need blockchain, because blockchain is in itself is boring. Blockchain is nothing. It's a string. It exists forever. It's like saying, I really like Bitcoin, but I prefer, the deeper technology behind it, blockchain. Yeah. It's like saying, I really like the Ferrari or the Maserati, but I'm really more into the technology behind it, which is the gear shift. It's not, and that's an Andreas Antonopoulos example. I'm not going to take credit for that, but I thought it was hilarious. Yeah. But it's cryptocurrency and
I'm sure there is a dude out there. There is a car freak out there that actually was like, well, that's true though.
Yeah.
The shift of the Ferrari is so amazing. I mean, so there definitely, that guy exists. Absolutely.
All right. So can you two expand on market manipulators and how long the Bitcoin price can be kept so low during this? It's not about market manipulation. Too many people are shouting market manipulation. It's not. This is what Bitcoin YouTubers say to get more views. There is certainly manipulation in markets in general, but what do you think what happens? All the big whales get together, they have a dinner party, I don't know, somewhere in Florida, like, hey man, come by my house, okay, how are we gonna fuck with these people today? Let's manipulate the market. Maybe there's a couple of them, whatever, but there's also whales against whales. And that's why I like TA so much, because the same technical analysis applies for whales and their competition whales. Why do I know they're in competition? Human nature. So it's not like they all get together to manipulate the market. Now, is there manipulation going? Yes. But it's just a bare trend. It happens in charts. It's just there. Some people made these Wyckoff distribution videos, which, yes, okay, it exists. It's it's the same thing in Elliott waves. It says the same thing in a different way. There's nothing special about it. It was a good way to explain things to people that didn't know about it maybe at the time. But, and nothing is always exact. But it doesn't mean that whales did it. It's human psychology that did it. That's my view anyway. Kevin?
Yeah. Look, every market is manipulable, and crypto is highly manipulable because it's still liquid. So there's definitely manipulation that happens. Private groups, look, there's private groups in traditional finance. We all know about the swap scandal in HSBC. If you don't know, a bunch of dudes got into a room and said, how can we screw everybody at 5 p.m. every day? And they said, well, we'll call you beforehand and let you know what we're going to change our swap rates to. We'll do the same. And then basically pocket the difference for that 15 minutes that we're offline. And they made billions. And there's actually in the WikiLeaks release, one of the WikiLeaks releases, they actually had a transcript of a meeting at HSBC where literally they asked, what would the fine be if we get caught? They said, well, probably the biggest in history, might be like $1 billion. How much will we make? About that a week. And they said, do it.
Yeah, of course.
Now the thing is with traditional finance, it's centralized as shit. So those meetings happen, and they happen all the time. But in this realm of the world, this crypto world, it's mostly decentralized, and thus it's more difficult for that type of manipulation to happen. Does it happen? You know, there is the Satoshi Roundtable. I hear about crazy stories about those guys wearing robes and like masks and beating each other with sticks. I don't know. Crazy stuff happens between those guys. But I do agree that most people perceive manipulation and it becomes a self-fulfilling prophecy because they'll read something on Twitter that says, July, like, watch out for July 2nd in some stupid face like this. And then somebody goes, oh my God, July 2nd. And then someone else posts it, July 2nd. And then what's happening with July 2nd? So I know what it is, July 2nd, the whales are dumping because there's been a bunch of Bitcoin that came off of exchanges.
Elon Musk tweet.
Yeah, there's been a bunch of Bitcoin deposited to exchanges, which must mean they're gonna dump it. And then people start selling, and then more people start selling, and there's the dump, but the dump never happened. So it's really about retail scaring retail and retail moving or retail hyping retail. The same thing. See, you can't have a market that goes up with rocket fuel that doesn't come down with the same rocket fuel. You know, and usually the drops are much faster than the ups. You know, to go up, you go like this, and then usually to come down, you just do this. So yeah, manipulation is a great scapegoat for when you get wrecked, so you don't feel like an asshole. You don't feel like an idiot because you're like, they manipulated my position. That's the same thing for the guys who say that they're stop hunters. I don't want the broker to see my stop loss because they stop hunt. No, they don't. I'm going to use this indicator because this indicator hides my pending orders because I don't want the broker to see it because they'll trade against me. No. Nobody cares about your $4 order. Nobody cares about your $14,000 stop out. Nobody cares. So anyway, it's human nature. That's why I said to be a trader, you need to get rid of that, and it's difficult.
Here, Coin Metro fees, can I use it in the UK?
Yep, absolutely.
Awesome. How exchange?
We have faster payments in the UK. We didn't turn it off like Binance. So you can fund your account instantly and withdraw instantly through faster payments, no limitations, and we have some of the best fees in the industry. So absolutely, we welcome you to the platform.
Also, how do exchanges trade against customers during longs or shorts?
So trading against is simple. It sounds more nefarious. Well, it actually sounds nefarious, and it is sometimes. But all that means is you go on the platform and you long, they take the other side. So rather than matching that to a client or sending it to a liquidity provider who will fill the order, they fill it. The reality is, though, they don't fill anything. It's like a casino, right? So you put your chips on the table, they take your chips, nothing really happens in the background. If you win, they pay you out, but most people lose. So you're longing Bitcoin, and let's say you long it now. So they just say, okay, you long Bitcoin. Great. You bought a Bitcoin. Awesome, right? They don't actually buy the Bitcoin because they assume that when you sell it, you're going to sell it for less because you're a retail trader, and most retail traders lose. And so there are going to be days where they lose money, but most days they're going to make lots of money. But what happens is when there's a day that either there's a massive upswing or a massive downswing in an asset, they end up being lopsided on one side of the trade. So instead of, normally me and Paul are trading at the same broker. He's looking at technicals, I'm looking at fundamentals. I'm buying, he's selling, all at the same time. So he buys and I sell, it's neutral. There's no position. So there's no risk to the guy providing that liquidity because there's no position. We just neutralized each other. However, if Paul and I are both buying, and there's a bunch of other Kevin and Paul's buying, then on the other side of that is the exchange, selling, and price keeps going higher. So at some point they go, well, we've lost 10 million, so fuck this. They shut it down. Now, obviously on the other side of the coin, pun intended, when they make a ton of money because it's a ranging market and they're on the other side of your transaction, they don't close it down to say, oh, these poor retail guys are getting wrecked. Let's shut down the platform so they don't get wrecked. No, they wreck you. And that's why it's nefarious. So look, a lot of times when you're a trader, if you get filled, you're happy. You don't care how you got filled. I'm a trader. I can respect that, right? If I put in an order for 100 Bitcoin and they fill it at the same price I want, I don't give a shit if they filled it themselves or if they sent it out to a liquidity provider. But I've come to realize that I do give a shit when things like this happen, when I want to get out of that winning position and I can't because they shut down their platform. So that's why in the next few years, I saw it in FX. Between late 90s, everybody was a bucket shop. All platforms traded against their clients. Then sometime into the mid 2000s, into 2010, 11, 12, that all changed because retail got smarter and they realized that they didn't want their broker to trade against them. And they all started to actually STP or straight through process to a liquidity provider. It's gonna happen in crypto. We already do it. We've been doing it since the beginning. We don't trade against you. If you lose, we lose. You know why? Because we probably lose a client because you end up losing your money and you walk away. If you make money, we make money. And that's how we want to keep the relationship.
Amazing. And again, check out Coin Metro after this video. The links are down below. You have to check out Coin Metro. Make sure you subscribe to Kevin's channel, which is Coin Metro on YouTube. Crypto Learner says false. Explain the liquidity on DEXs, but I think that's to a previous question, so let's not like answer that right now. Shilling Safe Moon, we don't care. Do you think right now crypto market is what internet was in '95 and like .com bubble? Will it burst? Well, that happens every 4 years, isn't it, Kevin?
Yeah. Well, and there's a bubble that bursts every day in crypto.
Yeah.
I think generally speaking, from the adoption standpoint and the understanding of the technology and what it can do, we are definitely 95 internet. Maybe even still 94. Maybe we're in 96 now. I don't know, but we're somewhere around there. What that essentially means is that most people don't understand how the tech works. Most people are worried if they don't understand how it works, they shouldn't use it, which is bullshit. Most people don't understand how the internet works. They use it nowadays without even realizing it. And we're still at a very low amount of adoption. And because of that, and the use of the technology, look, the internet originally, what was it used for? Well, porn. Not that it's not used for porn anymore, still is. But we use it for a lot of actual, legitimate things that actually help people and actually, build the economy. Well, porn builds the economy, I guess. But you get my point, is that it's used for a lot more fundamentally important things now. And right now, most of the things in crypto, when they start, ICOs, a lot of it was bullshit. DeFi, a lot of it is bullshit. NFTs, a lot is bullshit. Eventually, though, all these things form into one big, really important fundamental ecosystem that will drive the economy and drive the world forward over the next couple generations. And that's where we are. We're still early. We're still very early. Just to make a comment on the DEX thing, I don't know what the question was, but I love how someone called Crypto Learner is telling me that I'm false on liquidity, which is awesome. But here, Crypto Learner, let me give you an idea. I don't know what the question was, but DEX liquidity is very different from centralized liquidity. DEX books are actually very different because they're hidden. You can't see where you're getting hit in the book. Now, V3 on Uniswap allows you to pick a position where you can put your own liquidity. So you're, what do they call it? Immeasurable loss? No. Whatever I forget the term they made up in crypto for basically getting wrecked because you're on one side of the position all the time. You're now able to add in your liquidity at certain points. But as a trader, I still can't see where the liquidity sits. And that puts me at a disadvantage. And that's why most traders aren't going to use DEX liquidity. When I say traders, I mean real traders, institutional, et cetera. DEXs need to up their game. Centralized order books are always going to be more transparent to a high frequency or intraday day trader. But I don't know what the false thing was about. So hopefully he can clarify that one.
All right. So very important question here. Out and About is asking, what the fuck is XCM? And I think we should really get into this.
Sure. So XCM is the utility token that drives CoinMetro. So CoinMetro.com, the exchange that I'm CEO of, it's our utility token. It's our native utility token. Basically, everything you do on the platform, wherever you're interacting with the platform, drives the tokenomics of XCM, which basically drive the exchange forward. The more interactions there are with the exchange, the more interactions there are with different services we provide at CoinMetro, the more demand there are for the token, drives the token price over time. So that's what XCM is. It's called XCM, so we get asked this too, maybe this was part of the question. You'll notice a lot of tokens start with X. Even if you look on things like Kraken, they do XBT rather than BTC. The reason for that is the ISO standard for currencies works like this. The first letter, and sometimes the first two letters, indicate the country that issues the currency. And the third letter is the initial of the currency. US dollars means United States dollars, USD. Euro means actually Euro went a bit off the grain, but Euro is because it's issued by the European Union, but it's also called the Euro. And then you have things like, so BTC is actually not, if you think of it as a currency, isn't actually structured as it should be from ISO standards. XCM is X because there is no country that issues XCM. CM is for CoinMetro. So that's how we get XCM.
So XCM, and there you go. And you can also stake this for 5% compounding interest a year.
Well, if you're an ICO contributor, which I guess if you're asking the question, you're probably not. So up to 4% actually compounded interest per year you can stake right now. We expect that to go up over time as we build out, like we talked about early, that sustainable interest by building out more of the ecosystem.
All right, Escanor is asking, don't skip questions about pants because you started with your video. I made a video about how we don't wear pants in our videos and nobody knows about it, like all YouTubers in general.
I'm actually wearing shorts. I can prove it if you like.
So am I. Okay.
I'll stand on my chair.
Well, I would do the same, but I'm not, so.
Yeah, stay seated.
I'll just stay seated. All right. Kevin, thank you so much for being here again. This was like a great discussion. We're going to do another live. We're going to be doing this. I think we should do this more frequently, and
Absolutely.
maybe we should do a live stream just dedicated to CoinMetro and just questions about CoinMetro and XCM and whatever else we're doing next time. I think that would really interest us. Now that everybody has met you, has seen you here, I think that would be a very valuable, very interesting and valuable for them video to do. But thank you guys for joining us. Really appreciate you. Please hit that like button and subscribe if you haven't already, and make sure you subscribe to CoinMetro on YouTube and Kevin by hitting the by subscribing to his channel, to our channel as well. Thank you, Kevin. Thank you, guys.
Thank you, Paul. Thanks, everybody.
Take care.
Cheers.
Bye-bye.